today with AI and different options out there that will give you some options for mortgages is a little bit dangerous just because the mortgage process is pretty complex. And really to know the differences between all the different loans that are available, it's good to talk to somebody that you know and trust. Also, going through the whole process of doing a loan can be very complicated too, and having somebody in person that you can call and ask questions and make sure what they're asking you for is what they really need and want is the best way to go too, where if you're working with like an AI, it might ask you for something that you really have no idea what they're asking for. Another thing too, by talking to me directly rather than talking to a machine, is I notice when I talk to a lot of clients, one question leads to another, and having a quick phone call with me can really answer all your questions instead of having to try to get the AI to figure out exactly what you're asking, and then the leading questions might not be as good as working with a human being that really knows the process and how it works. And obviously then can follow up questions with you while you're on the phone. A 5-minute conversation on the phone with me could be an hour working with the AI trying to get down to the nitty gritty of what you really need to know. So a lot of the big box lenders have a box that you have to fit in. Where working with a company like me, which is a mortgage brokerage, I have lots of lenders to work with. And I have lenders that will do clients with lower credit. I have credits that will do clients that are putting less down. So the benefit of using me, especially once you've been turned down by a big box lender, is that I really look for all the options that are available. And if there's anything that can be done to get your loan done, I will be able to find that for you. Early on in my career, I was getting not a lot, but quite a few clients that would come to me, and they went to their bank, whoever they were banking with at the time, and tried to get a home loan. And for one reason or another, they couldn't qualify. And I learned real quick that it's because a lot of banks aren't wanting to work with people that need that extra step, that need a little bit more time or that need a little bit more help. They really just want the person that can come in and they have the right credit score for them, they have the right down payment for them. That's the niche I saw, was not everyone fits that box. And in fact, most people don't fit that box. So my idea was to bring in the clients that can't qualify at their bank and be able to help them still get the loan that they needed. I would say the biggest thing that I offer that a lot of other, even mortgage brokers may not offer, is I myself have done a lot of loans for me personally. I've owned up to 5 at a time that were investment properties. So I've done investment loans personally. I've also done a 1031 exchange, which is where you sell a home, use the equity to buy another home, and then you bypass the tax consequences for buying the next home. So I've been through that process. I've seen a lot in this business over the 20 years that I've been doing it. I've seen good times, I've seen bad times, and I've seen where it can be difficult to get a loan, and I'm willing to do what I have to find the best option and find an option. Even if there isn't one, I'll have one for you eventually. Yes, absolutely. I have a lot more bullets in my arsenal than most lenders would, especially the big box. And even some brokers. Some brokers will only work with certain lenders, or correspondent lenders have to work with one lender, and that's it. Where I'm a broker, I literally have a number of options for you, up to probably 50 different lenders that I could use if I had to. Obviously, once you start working with about 10, you have kind of the same options no matter what, but it's always good to know that you have others if you need them. So getting into doing home loans, my goal was to do the best I could to help people get home financing. And as I've been doing it, I'm realizing that I really want people to be able to trust me and really rely on me to help them get the best deal that they can. I've been doing a lot of home buyer classes, and what I've learned in that is once people get to know me, they really do feel comfortable asking me the hard questions, asking me the questions that they've been thinking that they just don't know who to ask and where to find the answers. So I really do pride myself on being knowledgeable and helping as many people as I can. Whether they use me or not, that's up to them, but I love giving my knowledge and really helping people make the best decision. So where I really stand out from a lot of different lenders is if for some reason you don't qualify today, but I can see a situation where if we work on things together that a few months from now you will qualify, I'm that guy. I'll sit down with you. I'll go over the steps, the things that need to be done in order for you to qualify, where a lot of lenders are just looking for the quick pay, where I'm never looking that way. I'm always looking out for what's best for my client. That might be months down the road, and that's fine with me. I've actually had clients that their credit wasn't ready. I sat down with them, we went over steps and things that we could do to get their credit where it needed to be for them to qualify. It took us 6 months, but she got the home that she wanted and was dreaming about. And that's what I do with diversified lending, is I try to do what's best for my client and try to help out as much as I can. I would absolutely agree that I am a bulldog without being a bulldog. I really will do everything I can for the client on my end, and I will guide them and show them what they have to do on their side. And 9 out of 10 times, if not right away, soon they will be ready to buy a home. A good example how I feel ethically, and I have to be able to sleep at night. And yesterday, I literally had a client call me and she said, I've been talking to another lender and they're telling me that I should refinance, even though my current rate is 6%, and the best that they can get me is 5.99. And I told her that absolutely makes no sense. It's gonna cost you money to refinance and you're gonna save maybe a few dollars a month. So I told her that if it was me and I was her, I would wait until rates, you gotta save at least enough money to make up the cost, in my personal opinion, in less than 12 months. So if it costs you $5,000 to refinance, you gotta be able to make up those costs within the first year, or doing the refinance doesn't work. And to be honest with you, the loan that she was talking about refinancing into would have probably taken her 30 years. They were probably taking her the home mortgage to make up the cost because it was such a little change in her rate. I know there's a lot of lenders that are, and brokers that are out there that will offer you a loan that really doesn't make sense, that doesn't get you into necessarily a better position, and it actually will cost you more money than you're gonna save. I absolutely will not do that, and I will tell you up front that I'm not comfortable doing that, but I'll tell you that you're gonna need to get your rate to a certain point for it to make sense. And I'm more than happy to keep an eye on rates, and when they get there, I'll let you know. And if at that point you still wanna move forward, we can take care of that for you. I hear a lot from first-time home buyers that they think that they have to have 20% down, and that is definitely a myth. I think where the confusion comes is you need 20% down to not have what we call mortgage insurance, and that's insurance for the lender. If the loan ever goes into default, they're insured up to 20% of the loan. And that is only protects them. So as a home buyer, you can get an FH loan with only 3.5% down. You can do conventional with only 3% down, or you can do VA with 0 down. So really, first-time home buyers, there are a lot of programs out there that you can get that are minimal down and not the 20% that it seems like a lot of people think they need to have. I get that we're not used to where rates are today, but to be honest with you, historically, they're still pretty low, and they are still pretty good rates. I always try to explain to my client that it's not really about don't worry so much about the rate. The whole adage of you date the rate, you marry the home. And so just remember that eventually rates, if they do come down, you always have the option to refinance, and then you can get the best of both worlds. Meaning house prices right now, I feel like they're a little bit inflated. And so getting into a home today, I'm not inflated, they're actually lower, because I have a funny feeling like home prices always go up. They really don't drop very often, and when they do, it's a pretty quick drop and they bounce back up. So home prices continually climb, where if you buy a home now, even though if your rate is a little bit higher and home prices go up when rates go down, you're gonna get the best of both worlds. You're gonna get a good price and you're gonna get a good rate. So if you can afford the payment on today's rates, I would always recommend that you buy today. When it comes to the housing market, there really is no wrong time to buy. It really comes down to, we all need a place to live. And I think most people would rather own than rent. And so home prices historically, I think it's like a 6% increase year over year. And so odds are the home is gonna go up in compared to what you owe. And so that's where it becomes, as long as you hold it long enough, you're gonna build equity. So what I try to explain to my clients and educate them on is interest rate is one tool to look at to determine your house payment. Property taxes are a big one, homeowners insurance is a big one, all of those affect your payment. But most of my clients aren't as concerned about the interest rate as they are about their monthly payment. Monthly payment is the big thing. If you can afford the monthly payment and it fits in your budget and it's the house you like, then there really is no reason to not get that home. The worst case scenario when you buy a 30-year fixed mortgage is your payment's gonna stay the same unless your taxes and insurance change, which they kind of do annually. That's why it's a good idea to shop your insurance. The other flip side of that is rate can't go up, but if rates come down, you have the option to refinance. And the other thing too that I always tell my clients, if they are really concerned about interest rates, is there's other options. There are options like ARM loans, and there's options like 3-2-1 buy downs. And a 3-2-1 buy down is when you purchase a home, the first year you get a 3% discount on your rate. So if you start at 6, you'll start at 3 for the first year. Second year you get a 2% discount, so then you're at 4% for the second year, and then the last year you get a 1% discount, so you'd be at 5%, and then it goes to that fixed 6% for the rest of the loan. But if rates come down during that period, you can refinance and you get the best of both worlds. So a lot of people come to me and they talk to me about how they have home equity or equity in their home right now, and they don't know how to get that equity out, and they don't want to refinance their current loan because they have such a great rate. I have a few options for them. I have what's called a HELOC loan, home equity line of credit, that works similar to a credit card. And the way that works is you draw money out of it as you need it. And then also I have what's called a standalone second. So basically you could take a second mortgage for a set amount, and then that's fixed for 30 years, just like your current 30-year fixed mortgage. The difference between the two is the fixed loan, you get the full amount when you close. So if you do a $50,000 second mortgage and it's a fixed, you get that cash at the closing table. Where if it's a HELOC, you basically can use it similar to a credit card. And let's say you're finishing your kitchen, you can draw money out to pay somebody to do demolition, and then you can draw more money out to get the cabinets, you can draw more money. So you can basically draw out of it and you only pay interest on the money that you draw. The reason that you shouldn't just go online and do the one-click option for getting a home loan, because it is the largest transaction that most people do in their lives. Not just that, but a lot of times when you do those one click, you are just really basing your decision on what one person says and what one person is offering. It's always a good idea to shop, and it's always good to talk to somebody live and really know what you're getting yourself into. There are so many different loan options out there now that just getting somebody that's experienced and knows all the different options that might be available for you might be the best way to go. I've actually had clients who have come to me and were declined by other lenders for one reason or another. And then based on me looking at their situation, we were able to adjust things or move things a little bit and make it so we can get it done. There are programs out there like you can get gift money from family members to help you with down payment. A lot of lenders don't allow that, where because I have so many different lenders in my arsenal, some do, some don't. The ones that do will be the one that'll work for you. Where a lot of other clients, when you go to a big bank, if they don't offer that, it's not an option. And where with me, I've actually had a client where I submitted documents and it wasn't even a necessary document for the underwriter to see. And it was something that the underwriter didn't like. And I was able to take that client to another lender, not show that document, and still get the loan done. Where if you were with a big bank and they only have the one underwriter, that's it. If they see something, you're done. Where with me, I can move to another lender if I have to. So a lot of my agents like working with me because I am local, and their clients get to meet me face to face and they get to see who I am. Where if they use an out of state or even a big box lender, they aren't going to talk to the same person every time. So they literally don't know if the answers are going to be different every time they call. Also, working with me directly, a lot of my clients, I think, just feel more comfortable working with a lender that's local, somebody that they can see, and somebody that they know that when they call is going to answer the phone and answer their question truthfully. I'm not saying big box and other bigger lenders don't do the same, don't answer things truthfully, but they know they can trust me. I love sitting down with clients, and I love to make them feel as comfortable as possible.